Hey everyone, welcome to Earnings Cheat Sheet for Friday, January 16th. It's Alexis, Garcia, and Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So Ed, what do you have on tap for us today?
Yeah, I'd like to take a look at GE Aerospace, Interactive Brokers, and DR Horton.
That's right. And let's go ahead and just start with GE Aerospace, which is scheduled to announce Q4 earnings on Thursday, January 22nd. Earnings for the company are projected to rise 9% to 144 per share. And revenue is expected to climb 13% to $11.2 billion. And here's why we're watching GE Aerospace. We'll be looking for signs of strong orders for new jet engines with Boeing deliveries ramping up. GE had relied on aftermarket services in 2025 as airlines maintained older jets amid some Boeing and Airbus delivery delays. And Ed, when we talk about those jet engines, it's really focusing on the company's LEAP engine. That has remained the company's most important product. GE aimed for roughly 2,000 shipments in 2025. So we'll see in earnings if they hit that mark. And it also could be interesting to see if any supply chain bottlenecks that have impacted the larger industry continue to be an issue for GE.
Yeah, GE's sort of the first one in this aerospace group. The whole aerospace defense group with a lot of diversity, a lot of names are doing well. So it'll be interesting to see what GE has to say. As you say, look, aftermarket and servicing, those are high margin, but still you want to be selling stuff. And so the higher jet deliveries should be helping on that. It's just a question of how much is already baked in because we know that deliveries are supposed to pick up. I mean, it doesn't take much. So, I mean, how much is in there about just for Q4, but for 2026, and just have to see, if those meet expectations or whisper numbers and so on. But accelerating growth on revenue in the last couple of quarters, last quarter, strong earnings pickup. So really acting very well.
And speaking of acting well, Ed, we're on the daily chart here. GE technically in a buy zone after peaking above a 316.67 buy point back here on December 23rd. Hasn't really advanced much since then, Ed. We saw a little bit of a pullback and a flirting with the 21-day line, but it did rebound. So thoughts here on the action and if this is a potential buy here with earnings coming up.
Yeah, so recent buyers who bought that breakout, they're going to have a decision to make because there's not really any real cushion. So that's tricky, but it could be potentially actionable here, either from being in this buy zone, or maybe you could treat, on a weekly chart, it might have a 3 weeks tight. We'll see if that develops, but it's been tight action so far. So the top of this little area would be a new high, could be a place where you could start a position, certainly could add, assuming we get a positive reaction to earnings, and just have to see how that goes.
All right. So really eyeing that 332.79 recent high as a potential entry area, Ed. And, when it comes to fundamentals, GE Aerospace really strong with EPS rating at a 98. We see the composite rating at a 99, a pretty solid accumulation distribution rating of a B plus. So it seems like there's some pretty solid fundamentals behind the chart action.
Solid fundamentals, solid buying, over time. The up down volume ratio is a 1.4. Yeah, the growth is going to slow a little bit. It's supposed to slow a lot of high numbers. And so that's something down the road, like especially later in the year, it's supposed to get down to, single digits, on EPS, at least, that'll be an issue. Will the market like that if they don't substantially increase that? Because that might change things, that trajectory. If not, or it could just mean a slower trajectory for GE stock, but this has been doing very well.
All right. Well, let's go ahead and move on and take a look at Interactive Brokers, which will report Q4 earnings on Tuesday, January 20th. Earnings for the trading platform are expected to rise 16% to 59 cents per share, and revenue is expected to increase 18% to $1.64 billion. And here's why we're watching Interactive Brokers. We'll be paying attention to net interest income, margin growth, and account growth, and any figures or commentary on crypto trading and prediction markets. And speaking of prediction markets, over on Polymarket, traders are giving Interactive Brokers a 58% chance of a quarterly earnings beat. That's as of noon Eastern on January 15th. That number has fallen from about 88% since the beginning of the month. And Ed, I think a lot of that has to do with the fact that Interactive Brokers releases metrics on a monthly basis. So we really shouldn't have any sort of element of surprise here with earnings. But it should be interesting to see how Fed rate cuts are impacting that net interest income rate, especially with the era of easy money starting to cool.
Yeah, I mean, one thing is that that's and all this one thing with polymarket bets is that they could beat earnings, but if their guidance isn't good, doesn't really matter. So that's the issue there. But this one has been doing very well. It's had a couple of quarters of accelerating revenue growth, as well as EPS growth. So again, the fundamentals have been great. The stock looks really good as well. It broke out. It broke out. It's like ahead of earnings. That's the only disappointing thing is that earnings are actually coming up. Otherwise, it would look more actionable. But broke out from the top of the base, or you could use a handle that's there. That was technically just a few cents lower. The volume dried up in the handle. The volume has been strong on the way up to the handle and now out of the handle. So a lot to like there. Despite some roughness over on the left hand side of the base, it's looking pretty strong right now.
Yeah, we see this pullback here in the left side of the base, Ed. And any thoughts? Because we see also, it also attempted this breakout. Back here in September, kind of looking at this 68 level is kind of an area where it recently cleared here on January 5th, but sort of some neighboring base action here. So, any thoughts about that?
Yeah, it's disappointing that failed, and it's notable that it failed around the time of earnings, the last earnings report. So again, this is why we watch out for earnings. You just don't know how that's going to go. Then it sold off with the market in November. There's some weakness there, but overall, the relative strength line didn't deteriorate too badly looking over the whole range. And now we're sort of at new highs or very close to it. So it doesn't bother me too much given that the market was having some struggles over this time. Yes, it would have been better if it had broken out, risen 20%, set up again, and now we have a new base. But it's much more forgivable given its performance versus the whole market.
And just looking at the weekly chart, we can see the RS line at a new high as this breakout's happening here. But in terms of fundamentals, Ed, anything jumping out to you? I mean, it still looks like some strong double digit growth in terms of EPS and revenue, but that does seem like it will be slowing down going into 2026.
Yeah, so it's gonna like really was strong in Q3. Will yeah, by late this year might be looking a little weaker. So that would be something. Are they going to suggest that growth now will actually be a little stronger than that? I think that would be really important for investors to hear.
All right, well, let's move on to DR Horton, which is scheduled to report on Tuesday, January 20th. The home builder is expected to see fiscal Q1 earnings fall 26% to 193 per share, and revenue is expected to dip 13.5% to $6.59 billion. And here's why we're watching DR Horton. We'll want to know any information or commentary on whether DR Horton is still offering heavy incentives to close out 2025 and if that will continue. And we'll also want to see a forecast on home deliveries. And DR Horton is the largest home builder in the US. So these results will kind of be seen as a bellwether for the broader housing market. And as we mentioned, the company has been offering some pretty heavy incentives in the form of mortgage rate buydowns and price concessions to move inventory. That's all due to high mortgage rates. So, thoughts on DR Horton?
Yeah, and so that's a big news that's been helping the stocks and maybe giving people hope for housing demand going forward is President Trump directed Fannie and Freddie to buy $200 billion worth of mortgage bonds, and that's been bringing down mortgage rates. So that's something that may mean that D.R. Horton can go forward and say, well, we're going to reduce incentives, or or we're going to boost sales with those incentives, but what not. So definitely want to see the reaction there. The fundamentals have not been great on this company, and we'll see how much can they rebound in 2026. Doesn't look like they're going to. So it's not that well. I know even though that fiscal year's already started, but still not great. So it's definitely down the horizon. The stock is betting. Investors are betting this will have some kind of turnaround, but that turnaround is still in question. So I have to see how that one goes.
And let's just see how the technical action looks here, Ed, because DR Horton has been building this long cup with handle base with a 184.54 pivot. In fact, I think this has been basing for so long. I'm not sure if that is even considered a valid pivot anymore, Ed, but it does seem like it is powered above the moving averages here on January 9th, perhaps breaking also a trend line here as well. So, thoughts here on technical action and what you would like to see set up.
Yeah, I mean, I basically am treating this handle as its own base. I'm sort of ignoring everything from there. I'm sort of using the bottom being March. We've had a rally, and now this is almost a bottoming base in some ways, or however you look at it. Yeah, it's above that trend line. It would be actionable, but earnings are coming up. I think there's the 165 could be another trigger spot. My own view is that I don't find DR Horton as the leader in the housing industry right now. Maybe earnings will change and they'll like, oh wow, it's going to really do it. I think Toll Brothers is sort of one of the real leaders in there. It's in the luxury space. And that's already cleared some of the short-term highs. It's almost back at highs. So that one, I think, was actionable there. And then they've got the 149. That looks better. Or you can do something broad like an XHB or an ITB. Those are ETFs. XHB actually has a lot of retailers and other things in there. So it's not just home builders, but those you can see are above short-term highs. They may not be, as opposed to DR Horton. Still, as you say, housing stocks tend to move together. So if DR Horton is up 5%, you're going to see a lot of other housing stocks rise as well. On the flip side, if it sells off, that could be bad news for a lot of the names in the group.
Right. That's why always important to watch any sort of related names out there. So those were some of the top names on our radar. But let's go ahead and rifle through some more. Starting with Netflix, which is scheduled to report on January 20th. And Ed, Netflix is really pulled back here since hitting some recent highs back last summer, trading well below key moving averages. So not something we'd really be looking to buy. But what are you looking at in terms of Netflix earnings?
Yeah, we want to see how the earnings are, if they can pick up, because it's like there's been a little bit of a slowdown lately, though. The annual growth should be pretty similar in 2026 versus 2025. So we'll just see if that actually happens. But obviously, this is a story about Warner Brothers. And the stock right now, investors are not happy or confused. They don't, or they're just avoiding it for now. This may very well go on another run, but this has been sliding. And honestly, it's been sliding for quite a while. I mean, it did, while most stocks have, since mid-year or so, this one has really been coming down, especially after the last earnings report, though a lot of that, again, there was starting to be Warner Brothers stuff. We need to get that out of the way. The market, until this improves, market feels like comfortable with that deal, or that deal gets struck down or something. This is probably off limits. It just feels like it's going to need some real repair time. Get above the 10-week line, get above the 40-week line before people should be, particularly excited. We talk about relative strength lines being at high. The rating, this one is like at 1-year low, essentially, or close to it. Rating of 14. That's pretty awful. Big shift. It was a real leader for a couple of years, but not right now.
All right, let's go ahead and check in on Charles Schwab Ed earnings there due on January 21st. And switch back to the daily here. Another one that's in a buy zone after a breakout here on December 22nd. That is a 99.59 pivot point.
Yeah, nice rebound in earnings this year, and as a pickup after, and should be solid growth next year. Revenue growth is a little lighter. It's in a buy zone. We'll see. Maybe you could use the recent highs as a place to buy or add, after earnings, though. That could start looking a little extended from things as well.
All right, so we'll keep an eye on that 104 level there, Ed. How about looking at Intel earnings there on January 22nd? And this one looking quite extended here, but another nice run. It kind of cleared above some recent highs here around the 42, 44 level. But thoughts here?
Yeah, I mean, look, the fundamentals are improving a little bit, or are expected to improve for the full year. It was a nice quarter, and it's supposed to, but it's still going to be very choppy. Revenue growth isn't great, but this is really a Trump story. I mean, the stock has skyrocketed. It's more than doubled since Trump, the U.S. took a position, and that's spurred others like Nvidia to get in there. Maybe this will generate like there'll be more until we'll get more business and to curry favor with Trump. I mean, let's just be honest. That's what we're talking about. That's why investors are excited, and there has been some things, so that may turn out. But I'd like to see some signs that the numbers are really going to pick up. I mean, I understand there'll be a bounce back next year that we're turning around supposedly, though some of these numbers, but I'd like to see some real signs of real growth beyond that, because this one hasn't been on the technical edge for a while. So can it really make some kind of sustained thing? And there's always the risk that for whatever reason that Trump will say something that could maybe make it go down, even if it's not negative, just isn't positive enough or something. You can imagine, since so much of this has been a rally on expectations of Trump tailwinds, if there's any doubt about that, that could sell off in a hurry. So it just added risk on that.
And how about we take a look at Intuitive Surgical Ed, those earnings due on January 22nd. And, in a consolidation with a 616 buy point, but we saw a recent gap up here. Last earnings really tried to move out here above this 582 level, but has since really pulled back, now trading below the 50-day moving average. So, what's been going on with Intuitive?
Yeah, and I consider that 480, 582, 583 area either a handle buy point or of a sort of a messy de facto flat base. So there was a breakout and it failed. I mean, it failed. And they this week they announced positive preliminary Q4 numbers that were so that's good. But they guided low on the procedure growth for basically their main product, Da Vinci, robotic surgical system. So the stock is sold off. It needs repair time. It needs to set up again, because if it rebounds right back, it would just look odd. It just doesn't, it wouldn't look right. It's going to need some time. So even if and it's not clear why the stock would move much on earnings, given that we sort of have an idea about what earnings and guidance will already be. So this one may be on the sidelines for a while.
All right. How about we take a look at United Airlines at earnings there on January 20th? We saw Delta report as well, but again, another one in a buy zone after breaking out on December 16th. That was a 110.66 buy point. So potentially actionable here.
Yeah, it's in a buy zone. You can see this sort of, it gets above some of this recent area, could be actionable as well. It's held up reasonably well after Delta didn't give particularly great results and guidance. So this one could definitely work well. Want to see, again, we're supposed to get a recovery in earnings. We want to see that that's actually going to happen as well. But it's like this is acting well overall here.
How about we hop on over to Halliburton, Ed? Our earnings there due on January 21st. And mentioning this one because obviously seems to have benefited from some of the news around Venezuela, but another one that looks pretty extended here.
Yeah, it's extended. Can't do much here. We don't know if the Halliburton news will pay off for the Venezuelan news will pay off for Halliburton, or when. I mean, that could be something, but it may be years before that pays off. The stock has rebounded quite a bit. I think there's expectations that there'll be some more business anyway, but the fundamentals aren't really there. I mean, we have declining. This is declining earnings in 2024 and 2025, and they're not supposed to rise in 2026. So that, I know that people price ahead, but it'd be nice to see down the horizon somewhere that you can see that there'll be earnings picking up again. That's the only thing there. But this one needs to set up again.
All right. How about we wrap up with a look at Freeport McMoRan earnings for the miner due on January 22nd. And again, Ed, another one getting to this round 60 level here, but another one that looks a little bit extended ahead of earnings.
Yeah, and this one really moves with copper prices. When you're talking about commodity companies, that's really what it is. I mean, there's been some big moves on this chart, but most of them aren't really around earnings. There's been other things like tariffs and other things, but copper prices have skyrocketed over the last couple of months with base metals, precious everything metal has been great. So as long as that happens, this will keep rising if it sells off, not. But it's too extended to do anything with it right here. You need to see this one set up again.
All right. Well, Ed, thank you so much for your insights today. We really appreciate it.
Thank you.
All right. Well, that wraps it up for this edition of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. And thank you so much for watching. We'll see you all next week.